My name is Phong and I'm a chartered accountant. Knowing your residency status is very important as it will tell you how much tax you have to pay or if you have to lodge a tax return. So, are you an Australian resident for tax purposes? Remember, the definition of Australian resident by the ATO is different from that of the immigration. The ATO relies on 4 tests: 183-day test, reside test, domicile test, the Commonwealth superannuation test. The 183-day test is the most straightforward test. If you stay in Australia for more than 183 days in a financial year, which is from July to June, you are more likely an Australian resident. The reside test and domicile test are about where your permanent home is, your intention or behavior while you are in Australia. For example, if your main home is in Australia, you have a job here, your family is here, then you are more likely an Australian resident for tax purposes. However, even you have no permanent home or you don't even stay in Australia for the whole year like you live in a shop overseas, you can still be an Australian resident. It depends on your origin, your intention or any laws that apply to you specifically. The last test is the Commonwealth superannuation test. Under the test, you are an Australian resident if you are a contributing member of some superannuation organizations. Then, do you have to lodge a tax return in Australia? If you are an Australian resident for tax purposes, you have to lodge a tax return if, firstly, you had a job and part of your wages were taken away to pay to the ATO for tax under a system called pay-as-you-go. Secondly, your taxable income was more than the tax-free threshold, which is $18,200 for the full year, or $416 if you were under 18 years old on 30 June of the financial year. Thirdly, you receive some special income like government pensions or allowances more than a certain threshold. Otherwise, there are some other reasons, such as you carry on a business, you had foreign sourced income, or you receive trust distribution. Then you may have to lodge a tax return even if your taxable income is below the tax-free threshold. If you are a non-Australian resident for tax purposes, you may also be required to lodge a tax return if you have derived income from Australian sources such as employment, business activities, or investments. However, there are some special thresholds if you hold a working holiday visa subclass of either 417 or 462. If your income is only from employment, one of the most important things you need to know is pay-as-you-go withholding or tax withholding. So, what is pay-as-you-go withholding and how does it impact you? In short, it can be understood as tax prepayment. In the case that you have wages higher than the tax-free threshold, which is $18,200, you may have to pay tax on it. However, the ATO doesn't want you to face a large tax bill at the end of the financial year. Instead, they require the employers to take away a certain amount from your wages and remit it to them on behalf of you. This means that you will not receive a full salary as per your employment contract. For example, your salary is $48,000 per year in the contract, which is around $4,000 per month, but you can only receive around $3,400 each month in your bank account. That may not sound good for you, right? However, it's actually crucial, especially if you are not good at cash management. Just imagine that you need to pay $6,000 of tax all at once while you have spent most of your wages during the year and you don't have enough saving. As a result, you have a huge debt with interest and penalties on it. It's terrible, isn't it? On the other side, for the ATO, pay-as-you-go withholding system helps them to reduce the amount of uncollectible tax. Let's recall when you lodged your tax return in the past. You normally receive a refund, right? Sometimes high, sometimes low. Some years you receive a few $1,000s, but some others you only receive a few $100s. Why? Is it all just accountant's fault? No. The reason is the pay-as-you-go withholding system. A part of your wages is taken away to pay to the ATO as a tax prepayment, which is called tax withheld. If your tax withheld amount during the year is higher than your tax payable, you'll receive a refund. In contrast, if your tax withheld amount is lower than your tax payable amount, you have to pay some more tax, unfortunately. Here's a little tip. You can vary the amount of tax withheld if you believe that the standard withholding amount will not cover your year-end tax obligations.
especially when you have 2 or more jobs. To do this, when you submit the TFN declaration form to your employers, only tick the box claim the tax-free threshold for the employer who pays you the most. To find out what is the PAYG withholding amount, especially for your case, you can search tax withhold for individuals calculator on the ATO website, then enter in your income for each period. So, this is the end of my video today. See you in the next one. If you feel it's helpful, please like or subscribe. Thank you.